All right. Good morning, good afternoon, good evening, wherever you are. Hey, VXP, how you doing? Hey, Ismet. Hey, Ayakame. Hey, Diana. Hey, Jambi. How you doing? Thanks for that, VXP. Hope you're all well. Hope you've been training well. Hope you've been feeling well. All right, so just a quick risk disclaimer before we get started. This live market analysis is sponsored by Max Global Markets, a brokerage firm that is registered with and regulated by the Monetary Authority of Singapore, the MAS. Max Global Markets has no control over or influence over the content of this analysis. So please remember that the information in this analysis is offered solely for educational and informational reasons and does not constitute financial advice. All right. Now, with that said, hope you're all well. We had a couple of nice trades yesterday. I didn't get into any trades. I was just not feeling up to it yesterday. So I missed out on in particular, the pound dollar that worked out very nicely. You know, I think we were saying that there was a bit of a divergence there on the pound dollar. We saw it come all the way down to that 61.8 Fib retracement level. So that worked out quite nicely. Missed out on that trade. I wasn't even looking at charts last night at all. All right, so if you did get into any trades, do let me know. Put it into chat and let me know. Okay, and hey D-Train, how you doing? Right, if you are new to the session, if you're watching us for the first few times, do remember to put into the chat. Let me know that you're here. Let me know where you're joining us from. And if you can help me out massively, click that like and subscribe button if you haven't already. Okay, if you have any questions at any point in time, please feel free to put it into the chat and let me know as well. Can you teach me how to see divergence later on? Yeah. I think I have a course on divergence. I'm not sure actually. I think I have done a session on let me just do a quick check. No, maybe not. Okay. Yeah, I can do a session on divergence next time. All right. It's basically using an oscillating oscillating indicator to show you points in a different direction compared to where price is moving. You could see a likely retrace. Thanks for that, Diana. Yes, it was sparing you guys the details. It was running between two different rooms in the whole night. Yeah, not nice, not nice at all. But yeah, feeling a lot better now. Feeling back to it. I wasn't planning. I wasn't thinking that I have to get well and I have to do this session. So good that we're here. Okay, so hey Booba, how you doing? Hey Pips Apprentice. Hey Jimmy. Okay, so what we had last night since we spoke, all right, we did see the US number come out a lot stronger than expected. Well, not a lot stronger, but stronger than expected. Flash manufacturing PMI for the US was a 48.9, got revised up to a 49.8. Expecting a 49.5, came out at 50. So manufacturing PMI in the US is now just in that expansionary phase, showing some good. There's a positive number. It's at 50 or over 50. It's an expansionary phase, showing that manufacturing industry in the US is growing. Same thing, services PMI 50.1, it was 50.2. They were expecting a bit of a slowdown to 49.9, but it came out at 50.9. So again, expanding in the expansionary phase. Right, so good news on both the manufacturing and services PMI for the US, and consequently, because of this news event at 9:45 p.m. GMT plus 8, we saw that, let's zoom in a little bit, right? This is at 8 and 9. Right, we saw the dollar continue to push to the upside. So yesterday we were talking, maybe the dollar could retrace from 23.6. That did not happen. I was also telling you that if it breaks above 38.2, we're likely to see the dollar continue back up, right? Only if it stays below 38.2, then we're likely to see that push back down. If not, then it's resumed its back, its push up. And that push up also was reinforced during that period because of the news that we saw from the US. A little bit surprising, but good news that we're seeing the dollar strength come back into play. Riyadh said, can you elaborate about the losing trade yesterday so we can learn? Yep, sure. I'll go through all the trades that we spoke about yesterday, what worked and what didn't work. So just hang on tight for that. Then that was the PMI from yesterday. We'll look at the CPI that was released early this morning, 8:30 a.m. GMT plus 8. Aussie CPI year on year was 5.2, expected 5.3, came out at 5.6. Quarter on quarter, 1.2, forecasted 1.1, previously was 0.8. Okay, so this shows that a bit surprisingly that inflation in Australia is having another leg up. It's growing again. It's increasing again, right? A little bit surprising because generally what we're seeing from everywhere else is that inflation is slowing down, especially given that Australia, the RBA, was possibly the second central bank. I think the RBNZ was the first central bank to start increasing rates. The RBA was the second one to start increasing rates. So for them to be so early, relatively early in the game, to actually see inflation growth continue to tick up right now is a little bit surprising, right? So you see that in May it dropped, or in June it dropped steady, dropped again in August, steady on, well, as expected, but still an increase, right? 4.9 to 5.2 in September. So it's been dropping in June, dropping in July and in August, but since September it's been slowly creeping back up. And because of inflation creeping back up a little bit right now, I think the BL was just sharing in the group as well that because of that, I don't see the headliner here, there, right? Because of inflation growth, it's spurring the market to consider or to bet or to price in higher likelihoods for the RBA to increase rates in the upcoming meeting, right? So something to watch out for. The upcoming meeting is on the first Tuesday of the month, right? So we just missed it out on that. It would be on the 7th of November with the RBA rates decision at 11:30 a.m. GMT plus 8. So something to watch out for there because of the current, increase. I think there are a lot of other data to be released as well, so we'll watch out for that. But it's just a bit surprising to see that come out as 5.6. And because of that, what we actually saw on the Aussie was at an 8:30 period. It was at 0.6360. News release spiked up to the resistance of about 6.4, right? Because of the increasing bets for RBA to hike rates, but then now it's been tracking back down again. Okay, so that was the news so far. Coming up at 4 p.m., we do have the German IFO business climate. I'm not concerned about that. But the main focus for today, but I don't think it's going to do too much, is the BOC, the Bank of Canada's interest rate decision. Right? It's a main focus. It's a major news event because it's a central bank rate decision. But I don't think it's going to do too much because they are looking to hold rates at 5%. Unlikely to surprise markets. They have been holding it since July, September, and now again most likely in October. Oh no, they've been holding it in September. They increased it in July. So they're holding it in September and most likely in October, 2 consecutive months. I don't think the rate statement or the policy report is going to surprise markets too much. Might be a little bit dovish, if I were to say. All right. So we'll look into the US CAD on what we could be looking to jump into during this news event. Okay, and then press conference later on, and then the ECB tomorrow, which I'll tell you about tomorrow, during tomorrow's session. Diana's asking, I didn't get it, if inflation going up, so it shall be negative, or I missed something. Okay, if inflation is increasing, generally is not a good thing because the target range for the central banks or central bank's target range for inflation is 2 to 3%. So with the inflation now at 5.6%, what needs to happen is, so the cost of living is increasing at 5.6% in the general terms, right? So what the central bank needs to do or will need to do or could do is increase interest rates so that they would attract more savings, people putting money into the bank, slow down the economic activity so that they can bring inflation down again, right? They want to bring it down to that 2 to 3% level so that cost of living is sustainable. It's not over the top. One loaf of bread does not cost an arm and a leg, so yeah, if inflation is going up, it's not there are different times to look at how inflation is going up. Right now, if it's going up, it's going to lead to or likely to lead to an interest rate hike, possibly. Not saying that RBA will definitely do it, but possibly lead to an interest rate hike. Okay, hope I answered your question there, Diana, about inflation. If it's going up, it's not exactly negative at this time because it's likely to lead to a interest rate hike. But back in the other days where, for example, during the financial crisis in 2008, 2012, those periods where we had inflation at like super low levels, that inflation increasing would have a different impact as well, or inflation decreasing is going to have a different impact as well. Okay, so now then looking at the charts, all right, dollar right back to Monday's level, right back to Monday's level. So we take all of that away, and it seems like it's continuing to push up. Essentially, remember that on Monday or through last week, we were saying that the dollar was trapped between that 106 level and 106.70 level. It's pretty much in a wider range. And at this point right now, oops, what's happening? All right, at this point Okay, at this point right now, it's at Monday's high, needs to break past this point to get to 106.70. I don't see it reversing from here. I see that as a continuation higher. Okay, and then if it breaks past that 61.8 level, we could see further upside. But as an immediate level, we're looking at this on the 25th. Dollar index break above 106.40 to reach resistance of 106.70. Okay, so it just needs to break past 106.40 and then climb up to get to that 106.70 resistance level. Relatively straightforward there for the dollar index. Right, checking this. No, there's no levels, no relevant levels there. Okay, so I'm happy with that. It's at the high, needs to break past that to continue higher. Bollinger is still reasonable. Could consolidate here a little bit before pushing up, but generally still looking for the upward push. Then looking at the chart. So now we're looking at the dollar strength come back into play. This one we saw yesterday, the Kiwi dollar, right, did not trigger. So we're looking for it to come down, bounce off this support before pushing back up again on the Kiwi. It did not actually trigger that trade all the way, even all the way through to this morning. Did not close above, so it did not trigger that trade. So we can take that away. Okay, so is it true that if dollar index is above 100 is good for USD? It's already above 100. It's a 106. Yeah, it will stay above 100. Is it true that if it's above 100 it's good for USD? Yeah. It's just a direct. I'll take it more. I'll take the dollar index more on directional. More on the directional bias rather than on the number bias, right? I'll look for it more on the directional, whether it's pushing to the upside or pushing to the downside, rather than trying to figure out the number itself, because different dollar index charts are going to give you slightly different numbers, because they take different percentages of the or how they calculate the dollar index. Okay, so something to watch out for there. So Kiwi dollar, I'll put this as a support down here. Our resistance was right up here. We see that turning down. That makes sense. I just want to check this level here. 50% works well there. You see that 23.6 is right there as well. That's why it's from this long move down. From this move down, we see that 23.6 has been holding. Right, so now anticipating that dollar strength to come back into play, then naturally you would think that the Kiwi dollar would trade lower. It's currently at 5845. If you were to sell this down 30 pip to a 20 pip, I wouldn't do that. I would say that on the Kiwi dollar, don't do anything now. I would want to see the Kiwi dollar trade down to the support at this point, and then if it breaks below this 5810 level, then we could look to sell down 5800, stop loss 20 pips, take profit 50 pips to the downside. Okay, so I would rather do that on the Kiwi dollar, just because it's right in the middle of that support and resistance level. Hey Joe knows and hey Rajunji. So I'll look for that instead. Okay. Kiwi, the buy did not trigger. We'll look for the sell at 0.5800 with a stop loss of 20 and take profit of 50 pips. Okay. Then to the Aussie. Aussie is actually should be alive, should be something that's, if you were watching it, if I were up to it, I would have caught this move, right? So we were yesterday looking for the Aussie to come up to test that resistance level, to form a double top formation, reverse from this point. That's why we have this arrow, right? Test the resistance, reverse back down, and look to sell down from 0.6384 or 0.6385 down possibly towards that 6290 level. Okay, so that move is already on the way. If you did get into that, it's already on the way. I think it's likely to continue, but let's say if you did not get into that, right now, and this happens quite often to a lot of traders, is that you turn on your computer and you see this. You see, oh, I have a double top, I have price already moving halfway, well, not halfway, I'm moving significantly lower. Is it too late? The question you always have to yourself, I guess, right, is it too late to enter? At this point, I would say it's too late, because if you were looking to sell down, let's say you want to rush in and you sell, you have a 40 pip stop loss, and then you think that you can have a 70 pip take profit to the downside, right? But what you're ignoring is that you could be bounced off from there or from there as well, and then that becomes a 30 pip or a 20 pip take profit. So it becomes a little bit too late to get into this trade at this point. What I would do instead is look for a situation where we have this, right? It's broken 23.6. It's coming down to that 38.2, which is very close. But I like it more at 50, so maybe wait a little bit. If it breaks below 50, because of the double top, because of the dollar strength coming back into play, so if it breaks below 50 at 6345, we can look to sell. So 6340, in this case, my stop loss can be quite tight, no more than 20 pips, right? Even 15 would be reasonable, and then you could come down to that 45 pip or 50 pip take profit to the downside, right? So I'm looking for this to push down. If it breaks below 50, because it's already on the way, so I look for it to break below 50. And why I'm ignoring 61 is because firstly 50 and 61 is quite near, and it's just at that point as well. So if it comes down, breaks, we're going to see momentum push it through. So because of that, right, this is what I would be thinking about. If I look into a trade and it's already moved, is it too late to get into a trade? This is what I would consider. So 6340, stop loss 15, so you can have a very tight stop here and take profit of 50 to the downside. 6340, stop loss 15, take profit 50. And if anyone else got into it right at the top, then we were, I think this was the example, 6345. All right. At this point, you'll be about 20 pips in. I think that once it comes to about that 50% level, you would move this to break even and then let this run, or you could even move it to secure some profits and then let this run. Right, so I wouldn't move it too early. I'll try and see it at that 50% level. All right, hey Kalinzi, gold, yep, for sure we'll get to that shortly. So that's on the Aussie dollar. Yep. And then onto the US yen. I guess you guys could have heard that I was not very happy with trying to sell down the yen. That's why I left it so far below. What we'll see here is that trade did not trigger. It's found 149.30 because of this point here on the 12th of October. Again on the 16th, not so much on the 17th, but yesterday it came close again to this level. So it came right down, and this was during our session. Right at 3 p.m. you see that was way outside of Bollinger. It was outside during our session. So next hour it came back in, and then it continued pushing up, following that dollar strength scenario, that recovery in the dollar strength. Hey Matic, how are you doing? Good morning. So right now, with the way it's pushing back up, I do feel like at this point we're going to see a bit more upside on the US yen, right? Because it tried to come down, it gathered some orders here. It looks like it's pushing back up again. Still, I'll wait for it to break above. This is a little bit, you might have to manage this a little bit more, but above 150.10, right? Stop loss no more than 20 pips. Take profit, I'll go up to 150.50. I'll go up every 50 pips, right? I'll go up every 50 pips, every 100 pips, because you will struggle to find or easily find a point of reference, right? So we're at 150 at this point. Not a lot of point of reference here. It's just a big spike up and then come back down. The only level we can find is right there as a major resistance, which is 151.50. Okay, so coming back to the current, then that's what I would be looking for. Above one, I don't even know why I have this point. Oh, this is this level here. I'm happy with that taken away because it's only a tail. And I want to see it break. So 150.10, stop loss 20, take profit 40 to the upside. You can continue, and if it continues pushing up, you can continue trading it higher as well. Okay, so US yen, we're still considering a possible intervention above 150, but you could be looking at US yen to buy 150.10, stop loss 20, take profit 40. And then as it pushes up, you can be looking to prepare further for your intervention. I think that would be quite a possible move back up. Look at the dollar already breaking above that high. 30 minutes for that to close. Needs to close that way. Okay, so hey OJ Miz, haven't seen you for a while. How are you doing? Okay, so I'm looking for that, and you see that if it breaks above, we're going to see a big push because it's been staying below for so long. I do believe that there's a lot of orders trying to catch that upward move, and that probably caught some orders already. And then as it pushes back up, we're going to see a big spike higher. Once it breaks above 150 towards that 151 level, you're most likely going to see a lot more comments from Japan about a possible intervention, or rather that they're not going to intervene. And then what happens? Suddenly it spikes down and they've intervened. Alright, so just watch out for that. Then onto the pound dollar. So we saw that move happen. That was great. I wish I caught that, but I didn't. Not very happy. I think this was the one that Diana was looking at. I would say that I would cancel, if you had that, I would cancel that order because it looks like it's pushing back down. So on the pound dollar, very similar to, well, it's pushing down very strongly. It's broken 61.8, but it's very close to that support level, right? And it's a very strong, relatively strong support level. We've seen it hold since the 4th of October over 1, 2, 3, 4, 5 times, right? So it's at 1.2150. It's only about 50 pips away. Could you trade it down? I wouldn't. Would I? Let me think. I wouldn't, unless I really had to enter a trade, that I want to manage very closely. I used to do that, but I'm a bit wiser and lazier now. So I would say that, if it breaks below this point, this looks like a terrible head and shoulder. Right, but you got a bit of a neckline there. I don't know whether that's exactly a head and shoulder, but it would look like a terrible one. So if it breaks past this point, yes, if you really had to, you could sell this down 1.2134035. Stop loss, tight, take profit. Nah, I wouldn't. I wouldn't. There's 30 pip take profit. Why would you want to put yourself in that kind of risk? I would rather wait for this to continue down, break that, and see a reaction. Look for reaction along this support, because we've seen it bounce 1, 2, 3, 4, 5 times. If it does break, then we can see it come down towards 1.2050. What you could do, if you are happy with the risk, is 1.2140, stop loss about 35 pips, take profit, could go down to 86, and then you'd say, we'll watch out when it's at that point, at 1.21. Right, because it could bounce at that point, but it could also break right through, like what happened here. Okay, so this would be a different view, bit of a more dangerous view, because I'll say that you're gambling that it does break below this support, which has held over the last 5 times. Jamil says, I'm still holding my pound trade in sell direction. Have a good yes, very good. I hope you caught the one that we were talking about yesterday, Jamil. Where we were looking for it to reverse and sell down. If you are on that, hold on to it. I do think that there's more downside potential. Okay, so I think 1.2140, stop loss 35, take profit almost 90 to the downside, 86. 1.2150. Very good, Jamil. Nice one. Stop loss 35. So Jamil said he got onto that trade that we spoke about yesterday. What am I saying? Well, sell 1.2150, stop loss 35, take profit 85 to the downside. Hesitation at 1.21. 1.2140. Okay, not 50. There we go. Alright, so we're looking at a break 1.2140, which is very close right now. Don't rush in. Disclaimer applies. Then we can see it come down to 1.21, hesitate there, and then if it continues down towards 1.2150. There we have it. Caught this too on the pound, 80 pips. Good job, Pips Apprentice. Well done. I'm so furious that I missed out on it last night, but I was just not in the right state to look at my computer and to trade. Matic as well, pound short like you have, I'm in. Good job, nice one. Sounds like you guys like jumping on the pound. I mean, every time I talk about the pound dollar, I see a lot of more people following that setup compared to other trades. You're most welcome there, Pips Apprentice. All right, again on the euro dollar, dollar strength did not lead to that bounce of that support, so we take that away. So I think Riyadh was asking about, elaborating on the losing trades yesterday. Technically, a lot of times we don't get into massive losing trades. We do have a lot of trades that don't trigger a setup. Right, our setups just end up not getting triggered because we have it at key levels. So just, percentages are there, but it's also because, a lot of it does not end up triggering. Hey, Matic, thanks for that. You're most welcome. Okay, I just get lucky with the analysis sometimes. We get lucky. Euro dollar still trending very similar to the pound dollar, pushing down again. Look at that setup, does need to break below this point, break down again. I would say that, let's see, at this point 61.8 broken, that's not, don't need that. So dollar strength scenario looks like it still might happen, pushing down. That's now a resistance. Make sure we can take that one away. We can take that away because 61.8 broke, and that's a resistance, while the next level would be about there. Nice one, Riyadh, right? Right, so what I'm looking for here is if it breaks down, then thanks for that, Udemy. Sell down 1.0560. I'm just wondering whether it, is it going to hold? Is this likely to hold? And this might be the scenario where it could be an alternate scenario. Right, so let's think about the euro dollar as a scenario where it could come down, bounce off. It could do that, come down, bounce off, and back up again. So I'm going to consider the euro. So we've been looking at all that dollar strength scenario. Let's consider what if the dollar weakens. So at about 1.0585, stop loss 30 pips, take profit 50 pips to the upside, 25 to 50. Right, comes down, bounces off, and you see this trend line has been holding quite well. So I'm looking for it to come down, test the trend line, bounce off, and then head towards that resistance and possibly back up. That's if we see that dollar's weakness, the dollar strength doesn't come around and dollar weakness resumes. So 1.0585 stop loss, 1.0585 stop loss 25, take profit 50. 1.0585 stop loss 25, take profit 50. Yes, it's jumped the trend line. Okay. I think euro will come down into the huge liquidity pool and bounce back up. Which liquidity pool you're talking about in this area? Yeah, it might come down into that and bounce back up. Yeah, I think you're talking about this liquidity area here. I like it. I like it when Jamil says, it's likely to bounce off the trend line, and Kalinzi says it's going to come into the liquidity zone and bounce back up. It sounds like we're all aligned. I hope this works out. I hope I catch the trade. I hope I'm feeling better to catch the trade. Pips Apprentice, you know how to play the piano. I'm terrible on the piano, but I know what you mean. 2 trades on the pound in 2 days, 80 plus pips. Actually, a lot more than 80 plus pips on the pound. I think, yes, the day before was almost 90 pips. Yesterday was 80 plus pips. So yeah, it's been good. The pound has been. I've always loved trading. When I first started trading, I loved trading the Aussie dollar because I was in Australia. I had good information, so I always traded the Aussie dollar. Then I loved trading the yen pairs, and then also the pound. Before Brexit, so the pound before Brexit was big trending scenario. 6 months to the upside, 6 months to the downside. Super wide range, or super easy to trade. So it's always been one of those pairs that I always favored, right? I can't say the same thing about the US Swiss franc or the Canadian dollar. In fact, yeah, those are just, I spend too much time on all the other pairs. By the time it comes down to these two, I'm worn out. All right. Jamil says, I'm also waiting at a trend line, then I'm in. Okay, fantastic. Matic said going to need bad US data to get the euro, in my opinion, or euro rate hikes. I don't think so. Euro interest rate decision is tomorrow. Oh, I just noticed that. Euro interest rate decision is tomorrow. I don't think we'll see a rate hike there. Dinner hosted by the Bank of Greece. I don't think that's going to do too much. Opening remarks at the lecture and the social science. Okay, I don't think that's going to do. Okay, I just saw that, but I don't think that's going to influence prices too much. Yeah, I think that Matic was saying that going to need bad US data for that to happen. It does look a little bit unlikely. But at 50 pips, it might be a technical play. On the euro dollar. Okay. Then on to the US Swiss franc. I think yesterday we were saying do nothing on the US Swiss franc. Well, why we say do nothing yesterday is because since we spoke about it, this was at 3, it's come up to this level and it's pretty much set right across. Right? It came up and set right across despite what the dollar has been doing. It's been sitting right across. Now looking like it's pushing back up. It's to trade it back up. It's a massive counter trend. I'm not sure whether it's a good idea. That's 23.6 right there. Breaking above 38, 50% is right there. That trend line is broken, so we can take that away. I would say that if the dollar does continue to strengthen, then I would wait for a reaction at that resistance of 0.9. Right? I'll rather wait for resistance at that 0.9 and then see what happens there, rather than to try and catch this up, because you see right at that point 8955 it could reverse as well, so it's coming not very far, 10 pips away, right? So I think that look for it to get to the resistance of 8990 or 0.9 and then we'll see a reaction there. Okay, so US Swiss franc, I would say look for reaction at 0.90 area. At 0.90 area. Okay, then onto the US CAD. Right, onto the US CAD, pushing up already. It seems like it's front running the rates decision tonight, but it's not. It's actually more because of the way the dollar has been moving. You can see US CAD as well. Yesterday's setup, if it does, we saw that push back up. 1.37, good 35 pip move to the upside. Again, if anyone caught that, do let me know. I think you guys are all mostly focused on the pound dollar. Anyone on the US CAD? Anyone caught the US CAD? Let me know. Right, if not, then it's pushed back up. So this double top is not valid. Take that away. This level, not so much, but I'll still leave it there. And we got previous high at this point. And this point there. Alright, I'll just put in one more level there. There we have it. Okay, take that body. Okay, so now I'm looking at this and I'm thinking we do have a couple of hours, well not a couple, many hours from now, or is it almost 4 p.m. we're heading towards 10 p.m. GMT plus 8 rates decision. I'm not looking at most likely staying at 5%. No surprise on rate statements, no surprise on monetary policy report. So you might be seeing continued weakness, some weakness on the CAD Canadian dollar. And if the dollar strength continues, we could see that push up. Just between here to that resistance is 23, 40, 30 pips away. I would like to see that push up between now to the news, and then you could be looking at a quick trade up 30 pips. I think it's overextended, so I don't even think that it would move that much. Right, RSI is hitting, that's why I think it's overextended. RSI is hitting to that overbought region. Kalinzi just jumped onto the US CAD after the recent 30-minute candle close, so I think you would have caught a bit of that move up. Yeah, I think it's not, I don't see big upside potential on this. I would say, look for reaction along that 1.38 level. Could get to 1.3, yeah. So what we're looking for, Red got onto US CAD as well. What we're looking for is for it to get to that point. 1.38. Alright, so we caught that was good. 1.38, that's a very tight take though. 30 pips, 15 pips, that's okay. So 1.3810, 1.38, let's see. What I would do is 1.38, because that level is quite not very recent. So I'll take that and I'll consider 1.38. I'll have a 20 pip stop and a 40 pip take. How about that? Alright, I just wanted to break above this previous high and then get to the round number. Okay, so with that, we're looking at US CAD to buy above 1.38, stop loss 20, take profit 40. Buy above 1.38, stop loss 20, take profit 40 to the upside. All right. And now, before we head into gold, if you can, just a quick reminder, everyone on TradingView, make sure you've hit that little rocket ship button. A lot of viewers, not many of you hitting that rocket ship button. And also on YouTube, if you can help me out, click that like button, the thumbs up. And if you haven't already, do make sure you subscribe. And with all that, now looking at gold, came down. So yesterday I was saying most likely I was looking for it to bounce along this range to push up. It broke down slightly briefly before coming right back up, right? So it broke down to that support level at 1952 before spiking right back up again, and right now it's sitting just below this 1972 level at 1970. Thank you, Diana. At this point right now, I think that we might actually see a bit of a downside on gold. Right? This was a quarterly high that we saw. It's pushed right back down. Even at this point. So what I would be looking for, Jamil says this is a very dangerous pair. It is. It's a bit gold is at the point where it's deciding what to do. All right, it's deciding what to do, and this is what you would notice on gold, right? I'll just share with you is that look at this. Down this area here is when it's deciding what to do. And if you're trying to force a trade out during this time, I guarantee you, you won't be losing most of the time, right? And then this is the way you'll be making money all the way back up. Same thing here, right? It's deciding what to do. Very similar at this point, right? No clear direction, deciding what to do. And again, at this point, again, deciding what to do. Okay, so you do I wouldn't say the art of trading gold, but the way that I look at it is that for gold, there are times where there are, easy trades to be made, and there are times where it's just sitting there, it's just deciding, it's just waiting, and there's where you have to be totally hands-off, right? You don't want to be forcing the trades out. So in this situation here, it is trying to figure out where it wants to go. Right, it's right at that 50% level. I would say that yes, gold could come down to that 1952 level, especially if we see dollar get stronger. But it's not something that I would be very keen to trade down to. Okay, so I would say that gold below 1966, give it some space, 1966 to 1952 could head lower, lower below 1962 to reach 1950 to 1966. 1966 to reach 1952. And there we have it. All right, dollar index still trying, still struggling and trying. Let's see what happens there. And if you haven't already, the Discord channel link is there for you guys. I hope you had a good session. I hope you can help me out. Click that like and subscribe button if you haven't already. If you have any other questions, put it in the Discord channel. If not, I'll see you all tomorrow, same time, same place. Take care now. Bye-bye.